Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today's episode 168, Net Unrealized Appreciation. Thank you for joining me back on the show. Hope all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to discuss something that's a little bit more unique and, not a lot of individuals know about it. And sadly, in my experience, not a lot of advisors or CPAs know about it. And it's a strategy called Net Unrealized Appreciation, which if you're not familiar with it or not in financial services, may sound like three foreign words. And who it pertains to is if you're still working and you participate in a 401k plan through your employer and you have publicly traded company stock in that plan, this is who that episode is for, right? So if you're not one of those, rest assured, don't turn off the show. Maybe you'll learn something that one of your friends or family members, or maybe you get a new job and you have this opportunity. So I would encourage you to continue to tune in to this episode to learn more about net unrealized appreciation. Okay, so if you're working, you participate in a 401k plan, and you have company stock in that 401k plan, what do you do with it? And so the idea is for our clients who have worked at a company for 10, 20, 30, 40 years, they may have seen their company stock grow rather significantly over those decades. And what happens is you start to have what's called an unrealized gain, meaning you haven't sold your company stock in your 401k plan. It's still in there. And maybe you originally, the cost basis or your average price, let's say, was around $10. And maybe today that stock is trading around $70. Okay, so you've got a $60 gain in this loose example that I'll use here. Well, the strategy of net unrealized appreciation, or NUA for short, would be when you leave the company, typically retirement, but let's say you just leave and you're 59 and a half and you want to go do something else. Well, rather than roll over your 401k, which just means simply transferring that account to an IRA, there's no tax implications when you do that. And then when you one day decide to pull from that IRA, any distributions will be treated as ordinary income taxes too. So whatever tax bracket you're in, that's how that money will be taxed. And the reason is, typically, in this example, your money may have gone in there pre-tax, meaning you've deferred income, your company match, none of those dollars have been taxed. So the IRS wants their fair share. So when you pull out money from that IRA, the money will be taxed at whatever bracket you fall into. Well, what NUA allows you to do is, instead of rolling over that company stock, you transfer it out to a traditional brokerage account. Now, there is one important fact here, is that whatever you paid for that stock, in this example, $10 a share, will be subject to ordinary income taxes in that year. Okay, but let's say, again, it's relatively low. So the stock's worth $70, but your cost basis or your purchase price, your average purchase price, was only $10. So you'll be subject to ordinary income on that $10 per share based on how many shares you have. But this is where it gets really neat and really cool, is that gain, right? In this example, that $60 gain, if and when you decide to sell that stock outside of your 401k, outside of an IRA, in this brokerage account, that gain will be treated as a long-term capital gain. Now, as of the recording of this show, it's October of 2021, and capital gains rates are still relatively low. Depending on the tax bracket you're in, it could literally be 0%, and the highest is 20%. Now, that is subject to change. There's hints that may go up to 25%. We don't know for sure. But all else being equal, today at least, that tax bracket for most all of our clients is lower than their regular tax bracket. So the idea is, if you're in the 35% tax bracket and your capital gains rate is 20%, well, on this $60 gain, you're saving that 15%, which is a lot of money potentially in taxes, by just doing again, this NUA strategy, you haven't really done anything else. Instead of rolling it over, you're just moving it to a brokerage. And by the way, when you move it into the brokerage, you don't have to sell it that day. So you will be subject to taxes as at your ordinary income bracket on the cost basis when you do execute this transaction or transfer. But when you sell the stock, again, you could wait 5 years, you could wait 10 years, you could never potentially sell it, right? And just hold on to it. But when you do sell it, it'll be subject again to your long-term capital gains rate. So it is a rather complex strategy. I certainly do not recommend anybody do this on their own. I certainly recommend that you do consult with your CPA on this strategy before you execute it, just to make sure that your tax advisor says, hey, this makes good sense. And they'll actually be able to put pencil to paper and tell you exactly how much you're going to be able to save in taxes. But we at Falcon Wealth Advisors are very familiar with it. As financial advisors, wealth advisors, financial planning, tax planning, this is a big strategy that we certainly use for our clients for many reasons. And I'm going to go over 2 very important reasons why you should consider this. But first, a quick plug. And so thank you so much for tuning in to Upticks here on our YouTube channel. Our subscriber count continues to grow. If you think our content is good, please feel free to give it a thumbs up. Also, if you're listening to this on your favorite podcast platform, thank you very much for tuning in. Share our content, like our content. Very humbled by our subscriber count. Like I said, it continues to grow. We continue to get more downloads every week. And just remember, this content is for you. So if you have any suggestions for new shows, please feel free to send me an email at jake@falconwealthadvisors.com. And I'd love to hear your suggestions for show topics. Okay, so the 2 reasons that I would recommend one highly consider executing this net unrealized appreciation when they leave their employer is for liquidity, or maybe another example would be tax diversification. Let's say you have, I don't know, $2 million in your 401k and it's all pre-tax. And let's say $1 million of that is in company stock, right? Well, if we move the $1 million out and do the NUA and we roll over the other $1 million, well, now you still have $2 million. However, 1 million is going to be taxed as ordinary income when you draw it out, and 1 will be subject to long-term or short-term capital gains, depending on when you buy or sell other securities. But the idea is that these 2 buckets that we've created are taxed differently, and that's going to allow for tax diversification, which what we've been seeing for our clients that are retired is extremely important, because you don't want to have $2, $3, $4, $5 million all in just one pre-tax bucket. Certainly it's okay, but if you want to be set up for a retirement that's going to be able to roll with new tax legislation as it comes through the pipeline, I love seeing clients with pre-tax IRA, 401k money, brokerage money, and ideally even some Roth IRA money. We could talk about that on another show, but for this strategy, again, you'd have $1 million in a brokerage, $1 million in your IRA rollover, and both of those are taxed differently. So as the tax code ultimately changes, we can roll with it and pull from different buckets based on your unique tax situation. Okay, so that's one, is liquidity or tax diversification. And then the second one, which again is getting a little bit more complicated, is, and you can certainly do options trading on the stock, whether it's in your IRA or in a brokerage account. So that's not it. Many of you may have been thinking of that, about selling covered calls, which again is an advanced option strategy. But the reason I like to also potentially roll it out is that, and again, this is another topic for another show, is that you may be able to borrow against the stock on margin, which margin can be a very risky way to leverage your money or borrow from your money. So again, you want to be very familiar with margin requirements and the rules and the risks associated with margin, but you can't do margin inside an IRA. So if you have $1 million in a brokerage account and it's invested, you may be able to access this money without having to sell it. I'll give you an example. So in our example here, your stock is, the average price was $10 and it's worth 70. And let's say that you think the stock would be a better time to sell it when it was $80 or $90 a share. And you want to hold on to it for a while, but you need money because now you're retired. Well, a short-term solution could be borrowing from that money on the form of margin. You pay a little bit of interest. By the way, our interest through our custodian is very competitive and quite low in our current interest rate environment. but you could take a loan against those securities to help fund some of your short-term income needs while we're waiting for that stock eventually to get to $75, $80, $90 a share. So margin could be a very powerful tool for you to use. And you can't do that inside an IRA, right? So that's just something to think about. You have more options when you have two different accounts here. And that's why I love using NUA strategies for our clients. All right, so the big takeaway is here, if you have publicly traded stock in a 401k, and if that stock has appreciated over time, you may be eligible for this NUA strategy. And I highly encourage you to reach out to your friends at Falcon Wealth Advisors to set up a consultation where we can crunch the numbers and go over the pros and cons of either rolling it all over to an IRA or pulling some of it out and having two different buckets. And we want to look at the tax planning implications around that. Okay, thank you. So that's all the time that I do have for you today. I am out there on 4 social media platforms. I'm on Facebook, Instagram, Twitter, and LinkedIn. So if we're not already friends, please feel free to send me a friend request. I love building out my network. My company, Falcon Wealth Advisors, is on the same 4 platforms. As far as fun updates, a quick side note, it looks like Facebook's parent company is changing their name to Meta, which is pretty crazy. I think it has a lot to do with the virtual reality world. So it just shows you how fast technology is advancing and these companies are pivoting. It's really fun to watch, and it's an amazing era that we're all living in right now. I think it's very crazy out there. So regardless of what you think of Facebook, I think it's technology right now is definitely growing exponentially, not incrementally. Fun topics. I am excited. I'm headed down to Cabo San Lucas here in November to go to a wedding for one of Rachel's good friends from high school. Selfishly, her friend and her soon-to-be husband are both big-time golfers. So I get to go play golf, which I'm really excited about. I'll certainly be posting some pictures of my rounds of golf out there on this channel. Also, I will post a picture of us wallpapering our breakfast nook. It is game-changing, if I had to say the word. I mean, we picked out this pattern, or Rachel picked out the pattern, and we got the wallpaper up. And you can see it here on the picture, but it definitely makes the room pop. What formerly looked as a just normal breakfast nook now looks like a completely new room in our house. So it's the little things that can really change a room, which I'm learning all about. Part of our COVID projects is Rachel's been redoing our things in our house that she's probably always wanted to do, but we never really had the time or budget for it because we've always allocated money towards traveling more. So we got some wiggle room in the budget. So we're wallpapering. Now, I didn't do it. I'd much rather spend my time trading stocks and bonds and doing financial planning with clients. So we did sub it out. But if anyone needs a good wallpaper person, the lady's been awesome. She's really good, and it looks really, really good, in my opinion. So that's all the time, like I said, I do have for you today. Hope all of you out there are staying safe and healthy. And thank you so much for tuning in. I hope you have a great week.